Hello, hello, hello. Let's try it again. I tell ya. Thanks for coming back. Now I can see comments and everything. Let's see if I lost you all. I don't know if Facebook notifies you. I'm guessing not. Okay. Let me get my stuff. I had to restart my computer, so let me get my stuff up here. Then I'm just going to start, and as you guys come in, you can say hi or whatever. But I want to make sure that I get going because people are waiting. So I had another gal that I visited with, and they started all on their own and are doing well. Well, they were doing well. And, hey, George. Yeah, I need an Annalise. I am not even, like, stupid with technology, but it, like, all locked up and then I couldn't get back in. Facebook. It's got its good, it's got its bad. So these guys wanted to, here's something we talk about all the time. Don't be paying stuff off early, especially if it's land, because these guys are a great example of that. They have a good operation. They know what they're doing. They've gone through ranching for profit, but for whatever reason, they've had a couple of bad years. And it has put them in a situation where they are not able to really, they can make their land payment, but it's going to be super tight. So she wanted to go to the bank, refinance, just so she could reduce that land payment a little bit and have a little bit of breathing room, right? The bank said, nope, not happening. Not happening? The bank tells you, no, we're not going to refinance so that you can reduce your payment and make it a little bit easier? What does it matter? We have equity in the land, but we don't want to refinance. And so this does not happen often. I'm just going to be honest. It is not something that I hear a lot. And that is because most of the time the banks are going to work with you. But for whatever reason, if you are an outsider coming into an area, a small area, the banks can very much play favoritism, right? And say, well, we don't want you in our area, so we're going to make it really hard. They might just be a harder bank to work with. I mean, I only know one side of the story here, and I do know that we've got some debt. They bought some stuff that didn't need to be purchased. And so if we need to make that land payment, we're going to have to beat Parkinson's law. Luxury, once enjoyed, becomes a necessity. That's going to go out the window. If we need to get rid of that pickup, if we need to get rid of the tractor, if we need to get rid of side-by-sides, whatever, get rid of them to get rid of the payment. But this is a really good example of stop overpaying on land. Because if you ever need to get the equity out of that land, the bank could very easily come in and say, nope, sorry, we are not going to refinance that for you. Who's in control there? The bank is. And so many people think, well, I have a good relationship with the banker. That's not going to be a problem. Do you also have a good relationship with the board of the bank? The owner of the bank? Because the banker is not the one that gets to make those decisions. The board of the bank does. And another guy that's doing dairy, he absolutely loves his dairy. The kids do not love it. And he has a son that is working with him. And so they are doing dairy and then they are converting to a beef operation slowly. So dad's going to work out, son's going to work into the operation, but the kids don't want anything to do with the dairy. I have been seeing this a lot. The COVID SBA money. A lot of people have got that money. It has taken care of a lot of debt. It has given people a lot of opportunity. And so I'm not going to say it's bad money, but these guys have this SBA money and they're overpaying it by $800 a month. Why? It's a 30-year note at 3.75%. Why overpay it just to go back to the bank to borrow money for other things? Do we need to be overpaying it? Can we use it to buy cattle and expand? Can we do other things with that money? Especially, can we take that $800 a month and direct it into a life insurance policy? If we want to pay it off early, we can. But this is what happens when we pay stuff off early. And you're going to see this is kind of the theme, because I had a lot of people in the last month doing this. We're paying stuff off early. And this is what's happening. We're creating equity in land, for example, if we're going to pay it off early. In this case, we're paying down a note. But if we take that $800 and we put it into a life insurance policy, we're going to have access to that money. So if down the road we want to pay it off early, we can. Paying it off early every single month just means we have that much less money for 10, 15, 20 years? We gave that money to SBA. Then when we needed cash again, we went to the bank and borrowed money. A lot of times what's happening is we're paying off land and we're paying it off early because that makes us feel good. So we go and make another $1,000 a month of payment to the land. And then when we need money, we go back to that same bank to borrow the same money we just gave them. And here's the thing. A lot of times our land payment is a mortgage payment, land payment, whatever, 3 to 4%. But operating is 4.5 to 5. So we gave them money to pay off a 3% loan. Then we turn around and borrow money on a 4 or 5% loan. That does not make sense in my head. Even if you just I don't care if you keep it as cash every month, you have it there to use it for those other things that you're going to need. And don't tell me that you're not going to need something, because life happens and we need something. But if you are not overpaying it and we're putting it somewhere where you have control of it, aka life insurance in this situation, you can get access to it without question. You don't have to go to the bank. You don't have to file all these forms. You don't have to pay all these fees. I talked to a client the other day that they are closing on a rental property. And I wrote this down. They have it's a $283,000 property. Okay. They are paying $10,000 in fees and charges. $10,000. I looked at that same thing when we bought our property. He is going to send me all of their loan documents so that we can look through them and look at what all their fees and charges were and figure out what is his true percentage on that loan rate, because there are fees and charges. So something that I want you guys to think about. Here's the other thing. And this is sort of off topic, but this is good information. We bought a rental property in October. I paid cash for it, right? Borrow your money from your policy, you pay cash for it. I did not finance anything. I had to pay $75 to the title company. And when you have a big loan and everything's wrapped up into it, you don't really look at all those charges because you just need it and you just say, okay, whatever. And I said, why am I paying $75 to the title company? Like, they had a title search fee of $150, which I think is absolutely ridiculous because everything's on the computer. You just have to key it in. It probably takes you 5 seconds. So we have a $150 title search fee, right? So that way if anybody, and it doesn't even really protect you. I digress. $75. For what's this for? So they can provide you a room. This is what I was told. so they can provide you a room to sign the closing documents. Really? Can we do it virtually? If I have COVID, they do drive up and sign. You didn't even provide me a room. $75. I wonder if the seller had to pay $75. When we sold our property, I did not look to see if they paid the fees, if we paid the fees. $75. Ridiculous. This client said that they were charging him for insurance or something. They were charging him for something, and he said, no, we're paying that, so you can't charge it. So they got the new documents and they just moved it to a different section. Same exact fees, they just moved it to a different section. Well, we have to. Oh, you have to? You have to do what? So I am now seeing we have a property with a loan and we have a property without a loan. Here is the fight. Parkinson's law, right? How fast do I want to create rental properties and income coming to me? Do I want to go borrow a bunch of money to do that? Or can I do it slower and pay cash for them, then decide if I want to do a refi out of that? I have not refied the cash out of this house yet because I cannot bring myself to answer the questions, send the bank statements, and have weeks of hell and fees and charges. Because is the interest rate really 3.1%? If you want to start accumulating those properties in that cash flow, that's the strategy. You borrow against it. Do I want all those loans out there? Or do I want to control those loans myself? Because that's what the infinite banking concept is. That's what Nelson was teaching us. At this point, I want to control that myself. Even though any of my colleagues watching this are squirming as they do because they want me to take the cash out, right? And I will tell a client to do the exact same thing if they want to grow their portfolio faster. It all depends on what that end goal is, right? It has been a wonderful 3 months to not have a bank statement come to me, to not have to answer all those questions. Is there other property I want to buy? Yep. Could I use the cash? Yep, sure could. But I have to also say, how fast do I want to get to that next step? Okay, so I got a little off topic. So that never happens. $800 a month they were overpaying. They also refied all of their stuff, moved it into just 2 loans. That's all they have is 2 loans. They're contributing to an IRA every month that they have a bunch of money sitting in that IRA. And if they want to expand that beef operation, why? We also have a universal life policy. This gentleman is 59 years old. The universal life policy is going to fall apart at 69. It says that right on the statement, that it is not going to go past 69. I am not going to get on a tangent about universal life because you guys know what I think about that. But make sure your policies are whole life. If you have family, I hear this a lot. Oh, my mom and dad have whole life. Do they have whole life? Are you sure they have whole life? They were probably told they have whole life, but they don't have whole life. Ran into that just the other day. Oh yeah, mom and dad have whole life. But we got a letter. We have to pay and I'm not joking, $30,000 a year to keep grandma's policy going. It's whole life. No. Whole life does not go backwards on you because you paid the correct premium. It is not whole life. I have seen policies go backwards that are adjustable whole life. That is not whole life. That is a universal product, and they use the word whole life on it. I've seen one of those, and the premium was going to be $50,000 or $100,000 a year to keep that alive. Okay. They had to do the math to figure out if that's what they wanted to do with that policy. But these guys, their universal life says it's going to collapse at 69 years old. Most likely, he's not going to be gone by 69 years old. So now figure out, what do we have to do to get something else started so that there is something for the next generation. Another client, they are both employees. He is starting a business and taking a loan from his 401k to do so. Now, I see this a lot too. People that have money in their 401ks, that interest rate is typically fairly low. What I've seen most of the time is 4%. They tell you, everybody that I've had a loan from tells me that the 4% goes back into the 401k. And if that is the case, somebody said to me, I don't think that's happening, but I don't know. I didn't see what was happening. So if that is the case, you're making a guaranteed 4% on that loan. That's not such a bad deal. The downside is if you quit the job, that 401k needs to be paid back in full, and they garnish your wages and tell you how much you're going to pay on that. They are not going to allow you to decide. And sometimes those loans are 5-year amortization, sometimes they're 10-year. It just really depends. But they are also contributing a lot of money into a savings account every month. And they don't have a lot of loans, but if he is using that money, they use some of it to remodel and go on a trip, we have to pay that back. We have to be honest and say, okay, we were putting $800 a month into this account. Can we afford to remodel the house? And we have to pay that back, so we have that money to use again. Okay. But borrowing 401k money to start a business, I don't think that's a bad idea. Me personally, my opinion, I am not a financial advisor. I do not think that's a bad idea. Why is that a bad idea? We're going to borrow 401k, we're going to start our business, make some money, pay it back, we still have money for retirement. It's essentially the same strategy. We just don't have as much control over it. Use the money. It's there. You can't take it out as long as you work there, so you may as well borrow against it. And you can't borrow as much. Typically, there's a limit to how much you can borrow. Sometimes it's 50% of what's in there. I had another client that he borrowed money and it was not all paid back, so they wouldn't let him borrow anymore, even though he wasn't at his limit. Too much control. I talked to another couple that they flip houses. So they buy houses, they flip them, and then they owner finance them to the new people. And they are charging 8% to do that. I think that's a little bit low. I would probably be charging 10 or more. But they also were very good about doing short-term notes on their house. They actually have a home right now that they are selling and moving into one of their new homes. And they were going to pay the new home off. I'm like, why would you pay the new home off? If you're constantly flipping because that's how they make cash flow, why have that one paid off when you could be using the equity? So they have a lot of loans because they have a lot of houses. Well, if you are going to obviously what they're doing is they're paying the bank off, then they're going back to the bank and borrowing that money again. They're doing that all the time if they pay stuff off. And so in their scenario, is it maybe smarter to not have that house paid off and not give them the extra money every month, or do a 30-year note instead of a 15-year note? Why give the bank the extra money every month just to turn around, go borrow again so we can buy another house? That doesn't make sense to me, and that is the business that they're in. She also made a comment that after she read the book, eyes were opened. She thought at retirement there was no tax bracket, that there was no, like, you didn't have the same tax brackets. She is not the first one to say that to me. The crazy thing is she is not a ignorant individual. She is very educated. She knows what she's doing. She works with her accountant. She's got LLC. She's got everything set up correctly. But the money mindset is what? Dave Ramsey. You struggle to get by. If they are charging people 8% to borrow money or to basically buy their house, right? 8%. But we're spending 10 or 12% on a credit card to flip the houses. We should be charging 10 or 12 and not paying. And so it at least covers the expenses on the other side, if we can get by with that. So the mindset of hurry up, get everything paid off. I want stuff paid off. Even if it's personal, the whole goal is to have enough houses so that they pay for your personal payment. But if we get into a housing collapse situation, that's great because our current house is paid for. That would be the only reason I would want to have my house paid for, right? But if we have enough money set aside for those situations, can we be okay in the meantime and do a 30-year note, have a low payment, put the difference into a policy? If we need it, we have it. Yes, it's going to take some time to build. Again, the situation, where they're at, what they're doing, all those sort of things make a difference. But you are not in a different tax bracket at retirement. You are in the same tax brackets. Ordinary income, passive income, those are the things that we need to look at. How can we get to the lowest tax bucket and stay in that, so we're always in that tax bucket and we're never paying tax on things? Hey, Lance. Borrowing money from a 401k to start a business is not only putting your savings towards retirement, but also your time and productivity. David, I'm not sure what you mean. 401k to start a business is not only putting your savings towards retirement. I don't know what that means. Good morning, Holly. I have another guy that works off the farm. This was an interesting conversation. He is working off the farm, possibly starting some businesses. They have cattle that go to a family member. The family member buys all the cattle because he has a contract with a major grocer that he is providing the meat to. He has a lot of loans because he is having to buy land from dad to save it. Dad he didn't necessarily overbuy, but he didn't want to give up some land that was next door. So he buys the land, made some other decisions that maybe weren't so great. Things happened, drought happened, all kinds of stuff happened. We don't have the money for the land, so now the kid is trying to buy that. He also got that SBA loan and is using that SBA money for some of this saving and finagling and paying off other debt and all that good stuff. So thank goodness for the SBA money, because that's going to be able to free up a lot of debt. But he is taking on a lot of debt just to save this land. So we have to be, it's a great strategy for them because they get to save it and all should be well. It's going to be tight, but all should be well. The kid is a go-getter. He is going to get, he's looking at getting a different job and he'll be fine. Everything will be good there. But dad is just very lucky that he's got the kids there to be able to save that. That is an option though. And I talk about that a lot, where usually the case is grandpa and grandma passed away, mom and dad are 70, they don't want to buy the land from the siblings, they can't afford to buy the land from the siblings. Then why can't we give the kids an option to go to FSA and do the 40-year note to buy some of that so that we're not having to buy all of it. It still is going to stay in the family. It's just going to skip us. Here's the thing. Nobody wants that land to skip them. That's hard to do. But if we need to save it, that is an option and a possible strategy. I have another guy with a construction job. He has a side business, and the side business is pretty mediocre. He is trying to get that up and running. We ended up talking a lot about the side business, which sometimes happens in my meetings, because people will come to me and say, oh, I'm doing Facebook ads and they're not working. Well, most of the time they're not working because you don't know what you're doing. And so in my opinion, Facebook just absolutely loves it when individuals who are not trained on the marketing side and don't know Facebook algorithms and how to run those ads. Facebook loves that because they can just take money and not really have the performance. Now, the only reason I know this is because I have a guy, and that guy only does ads. And it is a full-time job. He is starting ads, stopping ads, changing things, looking at this, looking at that, like all day, analyzing. And I mean all day. Like he might get up in the morning and, see what's happening. He doesn't like what's happening. He's going to stop it. He'll start it later. He'll change a word here. He'll change a word there. He'll change the audience. Oh my gosh. It's a lot. I've tried to do it on my own. I have had other people doing it that don't know what they're doing, but they say that they know what they're doing. I've had people that know what they're doing, but they don't have the time to devote full time to it. And so if you want to be successful, there are things, and I did a podcast on this, on my Without the Bank podcast. I interviewed both of my marketing guys. This is if you want to be successful on Facebook, and you have things that you can show before and after pictures. You can include people into your lives. If you are selling beef direct to consumer, fantastic. You can show the cows. You can show the clients. You can do it without having the ads. This gentleman has particular business. He can have before and afters. He can do lots of pictures, which helps to sell. So here's my advice to you. Don't go paying people to have ads or don't go paying Facebook for ads if you can do it and all you have to do is post. That is free, my friends. So there is a whole piece to the marketing. You need to be consistent, all that stuff. Kevin and Mike, who are my marketing guys, we will be doing another podcast for Farming Without the Bank, directly for farmers that are kind of in there's a large range of what farmers do. But doing stuff, we're going to be doing another podcast for the Farming Without the Bank. Don't go spending a ton of money. And that's what this kid is doing. Spending a lot of money on Facebook, but not getting a lot of return. Because you can't just spend money and then not post on your page either. So there's a whole method to the madness. Pay attention to what other people are doing. Okay. He has some credit card debt as well that needs to get paid off, because I'm not going to do anything with anybody that has 25% credit card debt and a lot of it. I am just not starting anything for you until that gets paid off. Another guy ranching with their son. Mom and dad have their own land, but they are going to be inheriting the land and the place, and then the rest of the family gets everything else. It is a clear estate plan, which is absolutely fantastic and not something that I see a lot. They owe very little money. They have been very smart about things. So that was actually a very fun conversation to have, because there wasn't a lot to talk about. Everything's already been figured out. Now we just have to talk about, what do we do with any excess money that we have? Where do we start? What does that look like? And start creating the generational wealth. Mom and dad are doing a good job of setting everything up, but we didn't have any death benefit on them. We don't have any generational wealth discounted dollars to be handing off. Have another one. I'm going to have to go a little... I'm going to just have to pick some here. This couple, this one is very good as an example. These guys started from scratch not inherited anything, doing direct to consumer for the last 10 years. COVID has helped them tremendously. They have gone from 250 head of cattle to 2 steers. That's all they have left because all the meat has been sold. Why did they go through meat so fast? Because the butcher shop did not process it fast enough. They built their own. They now have employees. The kill plant is not killing fast enough for them. So now they are adding a kill floor to their plant. This is what is exciting to me. They have had no help. They started from scratch. They are being successful and being smart about how they manage their money. They are not over their head in debt. She has an off the farm job that does help with family living, obviously. Nobody told you that you didn't have to have an off the farm job. This is something that I just thought about the other day. Everybody says, well, you can't farm if you don't have a wife that doesn't work in town. Or, you know, that's like there's like a meme about it and everything. Okay, so what about people that don't farm, that both spouses work? What about people that have a business where one spouse works so the other spouse can run the business? It's not just in farming, people. If we want things, if we want to expand our operation and do these things, isn't it helpful that one of the spouses works off the farm so that we can expand and we can do those things? If the wife's income is having to pay for the farm is not making money, and we better be looking at our books to see why that is happening. Okay? But this is what was fun about this couple. We see a problem, we have the solution, we do it. Instead of sitting back and saying, oh, we can't do this and we can't do that. That's not an option for them. This is the problem. This is the solution. How do we do that? How do we make that happen? He drove all over the country to buy used equipment for his butcher shop, to buy concrete blocks that were sitting around. Everything. He didn't go to Menards and buy everything brand new, right? Because he said it would have been $1 million. It cost them $300,000 or $400,000 to build it. They did it themselves. So it was very exciting because these people see a problem, they figure out the solution, and they do it. There are not a lot of people that do that. I had another couple that have an operation that their kids don't want anything to do with it. He's only 50 years old. And so we did have a conversation about transition. Are we going to sell it? Do they want the money and to enjoy the money from that farm before they die? Do they want to sell it and maybe they went to Montana and they absolutely loved Montana? Do they want to move to Montana? But we don't have to farm it forever. And starting to find that person to transition it to now is not a bad thing. 50. You're going to want to mentor somebody probably 10 to 15 years before you hand it over. So getting started and looking for that mentor right now is not a bad idea either. I met with a client, I met with their employee because my client said, you know, I don't want to give a 401k match, but I do want to give them something. And this is a great way for them to build the retirement and give him the liquidity to buy cattle of his own. He has a haying business, and be able to expand that business. So absolutely, that was awesome. I have done that a couple of times now with clients that have employees, and they say, hey, you know what, here, I just want to introduce you to this concept. This is something that you can do with the bonus money or 401k money that we're giving you. I had another client that is doing direct to consumer. They also don't have enough cattle. And so here is something else to think about. I have a lot of clients that do direct to consumer. Most, if not all, I'm gonna go on a limb and say the majority of these clients are out of beef. At this, the ones that have had an established business up to COVID, they are out of beef. I have several clients that buy beef from other ranchers, and because they can get the butcher spots or whatever. They're going to buy beef from other ranchers to sell to their consumers, as long as that beef is raised the way they want and they know what's in it. Because people that are selling direct to consumer are picky. They're not just selling whatever, right? They know how they're finishing it. Here is the thing. Right now, it is a big deal to go direct to consumer. Oh, I want to sell direct to consumer. I want to sell direct to consumer. If you are new to that game and you want to get in it, that's fantastic. I encourage it. However, if you are new to that game and you don't want to deal with consumers, because that can be difficult, think about this. Why not sell it to the guy that lives close to you that is already doing it? The people that I was telling you about that have 2 steers, they're buying from other people. Why not? Because if I am the rancher that does not want to deal with consumers, I don't have to start a website. I don't have to get a logo. I don't have to market my business. I don't have to start a Facebook page and post all the time. I don't have to sit at farmers markets. I don't have to deal with consumer complaints. I don't have to deal with just consumers in general asking silly questions that I might not like. Think about it. There is a cost to start a business. And I am seeing this a lot. That I have a lot of clients that are starting direct to consumer, but they do not have the time to raise the animals and do all the marketing. And so I'm going to pick on George a little bit. George, he put a comment in right away about Annalise. George and Annalise have a direct to consumer business. Annalise is amazing at marketing. They are a fantastic team. Okay? They don't mind talking to the consumer, but they're working it as a team. A lot of times what I am seeing is the husband has this idea or the wife has this idea to do direct to consumer and the partner is not on board, which means one person is trying to do it all. It's no different than what I do. I can't do it all. My husband he doesn't even know if he's on the internet or using data or whatever. He was playing solitaire the other day and thought that he needed internet for solitaire. Okay, he is of no help on the technology side of things. I have had to hire people to help me because I could not have reached all of you if I didn't have that help. So if you have to use somebody else's if you can sell direct to somebody else, don't discount that as an opportunity. It doesn't mean you have to take your cattle to the sale barn and get whatever the packers think that they're going to pay you. If we can help each other and help our neighbor out, why won't we do that? So think about it. If you have grass-fed beef, if you don't have grass-fed beef and somebody is selling meat, because I have farmers that are grass-fed, and then I have clients that are doing, they're finishing them on corn. I don't care. Consumers want both. Whatever. If you can find somebody to buy the beef, that is also going to be an option. I have had 2 clients. One client visited with me and he's got a lot of money. He wants to start another policy, but he is about 36 years old and had a heart attack last year. He's not insurable for 10 years. So we're going to have to go to somebody else. Talk to another client. I talked to the wife. He is a 51, maybe 50. He's got to be 50 at least. He just got diagnosed with cancer. Uninsurable. Okay, so we don't know when we're going to be uninsurable. We have no idea. But now we can't get any more life insurance. So you always can do convertible term. And I write a lot of convertible term. That means you can buy a term insurance policy all on its own. That health rating is going to be saved for the number of years that term is, that it can be converted. So for example, we have a 15-year term. We can convert that death benefit to whole life without doing a health exam. Both of these cases, that would have been nice to have that, and we did not have that. Okay. Most people do not want to pay for that term insurance. I personally myself have convertible term. because I needed the death benefit for my family, but I did not have the financial means to pay for another whole life policy. So it's there with a good health rating that I can convert along the way if I want to. I have another client wants to start another policy because he is doing some solar grazing with his sheep, which is very interesting to me. Sheep or goats? Ooh, I forget which one. But all these, we don't have them here in the state of North Dakota that I'm aware of. But they call them solar farms or whatever, just all these solar panels set up on land. And obviously the grass has to be cut around them, something I did not think about. And so instead of them mowing it, they're paying him to graze. He doesn't have to pay somebody else land rent. Win-win. That was very exciting. And then I had another client who has got a payout from his previous employer, and we need to figure out something to do with that money. So the moral of the story is you don't know when you're going to need another policy. You don't know when the money is going to come in. There are going to be lump sums at times. We don't know if that money is going to continue. How is the new policy going to be structured? Should I start a new policy? Yada, yada, yada. So lots of things to talk about. I have had a lot of meetings in the last 2 weeks with existing clients, which is awesome. We've had a lot of refreshers. We have discussed if we should start a new policy. Nope, maybe we shouldn't start a new policy. Can we use that money? Should we use that money? Lots and lots of good things. This week has been a lot of new clients, and a lot of those are refreshers. Why is there a term on my policy? How is that structured? I'm only paying the minimum. Why aren't you paying the maximum? Well, my husband doesn't like the policy. Well, why doesn't he like the policy? There's a lot of things that we need to be talking about and reminders of why we have the policy, which was today's podcast, Use It or Lose It. All right, let me look at this. Hey, Bruce, how's it going? I thought of you this morning. I am for investing. Oh, I think I understand what you're saying, David. I'm going to have to read that later. But yes, that makes sense. Good morning, Cornelius. How's it going? Well, thanks, David. It's something that we forget about, right? We don't think about, we can sell to the local consumer. Here's something else on that note. Well, I still have you guys. So many people don't want, especially in North Dakota, we do not have corporate farming. I am not okay with that. I will probably get some backlash for that. Corporate farming is not a bad thing, and I've probably talked about this before because it seems like I talk about this a lot as well, but corporate farming is not a bad thing because if you can set yourself up as an S-Corp designation, that can save you some money on taxes. Nothing wrong with that. Provides you protection so that if you get sued, they can't come to you personally. However, if I go to South Dakota, Iowa, I think it's Iowa, Nebraska maybe, I've got some clients down there I have a client in South Dakota that helps people set up helps bring big farm operations into the state. And then I have farmer clients who either grow corn or they have chickens or they have hogs or whatever. Okay. So let's think about this. If I am telling you, Mr. Rancher, you don't need to go to the sale barn because your direct to consumer guy may want to buy your beef. You just saved auctioneer fees, barn fees, right? You didn't have to go to the sale barn the night before, haul them in, sit there all day, wait for them to sell, pick up your check. You wasted an entire day, even if you haul them in the same day. You've wasted an entire day if you've sat there all day. Same thing in these states where if I have chickens, I can sell my chicken litter to the farmer next door, and the farmer next door gets to save money on fertilizer because he used my chicken litter, which is going to be cheaper than synthetic fertilizer. And I've talked to farmers who said that our state did not want corporate farming. They hated it. But now the guys growing corn love it because they can haul it to the hog guy. They can haul it to the dairy guy. The dairy guy has the waste that can go on as fertilizer. And guess what? We're helping each other out. It makes sense in my head. Okay? Do I want the smells of the dairies and the hog operations and the chicken operations? I will take the smell of hogs and dairies over chickens any day. I hate the smell of chickens. I just don't like chickens, period. I grew up with them, but for whatever reason, I have a little bit of trauma around chickens. I just don't like them. But nonetheless, the litter is fantastic. If you can use it and we can help each other out, let's do that. Let's think of how we can do that. If you are a direct-to-consumer seller, can you go to the neighbor guy and say, hey, we need some beef. How are you feeding? What are you feeding? Yada, yada, yada. Maybe, and maybe I have had clients that are direct to consumer go to the neighbor and say, we need beef. I need you to raise it this way. We have a contract. We're going to buy 10, 15 a year, whatever it is. Neighbor says, okay, sounds good to me. Win-win. We can do that in all aspects. Why aren't we helping each other out? Just makes sense. Okay, guys, that's all I have for today. Sorry. Thank you for coming back. Thank you for putting up with the technology difficulties. I appreciate it. Let me know if you need anything. Message me here. Email me. If you've not grabbed the book yet, go ahead. Grab the book at farmingwithhealthbank.com, and then we will talk. All right, guys, you have a fantastic weekend. We'll see you in 2 weeks.